Well, we're back for 2026, and so is the market, pushing back towards all-time highs, but how long can it be sustained? So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 27th of January 2026, and before I start, you do need to be aware that whatever I say is general advice only. Tomorrow we're going to have Australian inflation data for the fourth quarter of 2025. The data is expected to show trimmed mean inflation growing by about 0.9%. Annualized, that's well above the RBA target range. If that data comes in as expected, we could see an RBA rate rise as early as February. This is going to be a hugely important data point. We've seen that our recent economic data has basically shown inflation is coming back, the jobs market is looking pretty strong, economic growth or other economic measurables are holding up all right, and the justification to continue cutting interest rates is no longer there for the Reserve Bank of Australia. So this data point could be hugely important. It really sort of, if it does come in as expected or higher than expected, I think will solidify that rate rise in February, and that will be very negative for the Australian market. Overall, I do think the Australian market would be falling off already if it wasn't for strength in the US. The strength in the US is continuing. They're continuing to print record amounts of money, exponential amounts of money, and that money printing from the US government has to flow somewhere. It's flowing to US shares, and it's also flowing to foreign shares, including the Australian share market. The problem is, though, our market can only ignore the local situation for so long. So, if we do get a bad inflation read, I don't think it can ignore it for very long before we see a resumption in selling. So that inflation reading, it's going to be 11:30 a.m. Australian Eastern Daylight Savings Time tomorrow, and I would expect to see the market move on the back of the reading. If it's as expected or worse, we should see a pretty strong sell down, in my opinion. So if that happens, does that mean we're going to see the RBA lift rates in February? Already, the market is pricing in about a 60% chance of an RBA rate rise in Feb. And they're also pricing in perhaps another rate cut, a second rate cut at some point this year. Overall, the economic data is pointing to rate rises more than rate cuts. So this is something that we'll have to keep a very, very close eye on, with tomorrow's economic data, with the commentary as we approach that event. And I think, it's looking somewhat likely that we do see the rate rise in February. That, again, would be another negative thing for our market. And, given that we're approaching all-time highs, I think it would be very, very hard for us to maintain the strength as we go into a potential RBA rate rise. That does contrast us a bit with the US. They're actually expecting more Fed rate cuts. Now, the reality is they probably shouldn't cut rates any further, but there's enough political pressure and market pressure on the Fed that basically means that they probably will cut rates again. Following that, Trump's likely to replace the current Fed chair, Jerome Powell, with one of his lackeys, and basically sort of try to remove the independence of the Fed. And if that's the case, it'll be on for young and old. We'll probably see hyperinflation, a collapse of the US dollar, and maybe the Republic will go with it. Go gold, Mike says. So yeah, it does contrast a bit with the US, and we're seeing that with the Australian dollar, which has been pushing up relative to the US, which has been weakening recently. Really, crazy stuff that we're witnessing at the moment. A rate rise likely in Australia, a rate rise, not going to happen in the US, possibly should be considered over there. They're actually going to see rate cuts purely because of, let's be honest, absolute stupidity rather than anything else. Finally, we've got earnings. We've got some US company earnings this week, including some very, very large companies such as Microsoft, Tesla, Apple, a few others. They're going to report this week, and they're basically going to set the mood for the AI trade, set the mood for the US market, and basically probably decide whether their market breaks into fresh highs or holds below the all-time high and falls off. Again, it's probably not going to justify fresh highs, but given the amount of money printing from the US government, we can't rule out a break higher, even on fairly modest earnings growth. If we do see a pretty underwhelming set of reports, that could see a bit of a break lower as we see a bit of a revision in the AI trade. It might even trigger some large selling. But overall, with the US government essentially pumping money into the markets, if you look at the actual numbers, you would be surprised literally how much money is being created. Orders of magnitude more money has been created in the last 5 years than pretty much at the entirety of human history up to the last 5 years. It is shocking what's been done. And so, even though we might see selling initially, eventually I do think that the US markets will reinflate. We'll see hyperinflation in share prices. Following that, we've got the Australian company earnings reporting season in February. And we could see selling in Australia. The money created in the US is unlikely to flow to the Australian market as rapidly a rate as it is flowing to the US market. Add to that our companies haven't increased earnings for about 4 years, and our share prices are significantly higher. On top of that, it's basically the most expensive on a per share basis that our market's ever been as well. So yeah, I think we've got the Australian company earnings season in February. I think that could be a bit of a tipping point for the Australian market as well, especially if we do get that RBA rate rise in February. So for me, I think it's going to be very hard for our market to rise beyond February. Maybe we'll see a little bit of a push up in the short term if inflation is a little bit lower this week, and we get some strong US reports. But overall, I think it's very, very difficult for our market to justify much further room to the upside. And yeah, for some time I've been saying February 2026 could be a bit of a turning point. That's what I'd be looking for in the next month. If we have a quick look at the charts, we'll start with the US market. It still looks quite positive. There's a little bit of room to the all-time high. I'd say that's quite likely. Whether they break that all-time high though or not is going to come down to the strength of the company reporting. So yeah, they've got some big reports this week. If those are good, we could see a little bit of a push through 7,000 maybe. I don't think we'll see too much more, maybe 70-50, something like that. Overall, I think we're probably going to see more sideways to slightly higher movement in the US, unless those earnings reports are negative. For the Australian market though, things are a little bit more complicated. Our technicals look very positive. If anything, the Australian market technicals are suggesting further gains. We can see on the chart here that we're on a much nicer, cleaner uptrend, at least in the short term, than US markets. We've got multiple touch points, multiple higher peaks and troughs over this period, and even today we've just gone through the 8,900 level. For our market, we do have resistance levels at every 50 points. So we've held resistance at 8,950 today, but if we can break that, we should see a move towards 9,000. And if 9,000 breaks, I suspect we'll see a new all-time high up around 9,100 or above. However, even though these technicals are looking quite bullish, what I said during the slides holds true as well. Our market is not worth anything near 9,000, possibly isn't even worth near 8,000. Now we keep pushing up a bit, given the overseas printed money, the overseas momentum, but reality will kick in at some point. And it could be with our higher inflation read tomorrow, it could be with the RBA rate rise in February, and it could be with our likely terrible company earnings reports in February as well. So tentatively in the short term, still a little bit bullish, the technicals are bullish. Medium to longer term, there's only so much lipstick you can put on a pig before everyone sees that it's a bit of a pig. And to be honest, our market has operationally we've been terrible. It's a joke how badly the Australian market, the companies listed here, have performed. And at some point, the market will realize that, and we could see a pretty big sell down. Like I said, possibly February, March sort of timing. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe. Hope you're able to stay cool. It's a very hot day here in Melbourne, and I'll see you guys next time.